Thank you, and good afternoon. I'm sure that was a fantastic introduction of myself. I'm not sure what was being said, but hopefully all good. So I am Henrik Andersson. I'm a partner with McKinsey & Company based in Stockholm, which is part of what we call our Business Technology Office, which is basically the group of McKinsey that focuses on evolution in technology and how we then import that into different kinds of businesses. So there are three things that I thought I would bring up today. I want to talk about what we see happening in financial services, and we see a lot happening in financial services today. I want to talk about the value at stake and the kind of change that we see some of your competitors in other countries are going through. And then perhaps the question that could be quite interesting to many of you is, what do we think that you should do about it? But before, I will start off with showing an example from Allied Irish Banks on what digitization can do. And this is looking at the mortgage process of applying for a mortgage. So what they've done is that they've basically taken the process of applying for a mortgage from being several days down to being, I know this said 30 seconds in the video, but it's probably more like 30 minutes. They've reduced the cost by 70%, so the bank is profiting from it. And they've achieved over 80% of the mortgage applications that are coming in are getting an automated approval going through. Now that's digitization, right? That is how you put many things together. You do something that really helps your customers. It helps you as a financial services provider and everyone around. So we believe that there's a number of different things that are changing in the financial services landscape that are important inputs to your strategy. And so I will hit on a few of these. There's a change in customer behavior. That is perhaps the most obvious one. There are digital attackers popping up everywhere. We're going to talk more about that in this presentation. I think in the presentation after, we're going to talk more about disruption. Price and margin pressure that's coming up through better transparency. So customers now can see products much more quickly from multiple parties in the market, which puts pressure. There's a winner-takes-it-all dynamic that's coming up. That has to do with the infinite or the at least extreme scalability of any kind of digital solution. So whoever has the best first solution tends to scale very, very quickly. We see a blurring of lines between industries. It's no longer just a bank that is a bank. It's no longer an insurance company that's an insurance company. We see other companies that are starting to provide financial services. We also see banks and insurance companies and other financial services players providing other services because they realize that they have a customer relationship they can use. And importantly, we see a talent mismatch within these companies. I'm not going to touch on all of these, but let me focus on two. So first of all, the change in customer behavior. Now, it's no secret that mobile is becoming the preferred channel for many customers. And that is because it is allowing customers to do many things they couldn't do before. They can shop wherever they are. They can basically be in a store and they can check other stores at the same time, do price comparisons. They're becoming in control of the process in a different way than they were before. It's no longer that I'm going somewhere and someone is telling me what to do. I am running the process myself. It's personalized. I can get offers that are targeted at me and what the company knows about me. And I can have a voice. What I say about this process, I can now publish. There's a large audience that's going to read about it. Hotel ratings, travel ratings. You've all seen that when you search for that online. You look at, okay, how many stars does this hotel have versus what's the ratings that people are having, right? Now, so this is interesting, and this applies across industries. But if you look at the financial services industry, what is true in many countries is that online has gone further in other industries than is gone in financial services. So in many places, most actually, customers are forced to be less digital when they come to financial services. Now that's both obviously an opportunity and a challenge that we need to face. Now these numbers are perhaps a little bit over a year old, so you may look at and say, okay, what has now happened in the last year? And so what we're seeing, and this is a banking example, is there's no show of slowdown in adoption of digital channels. Online banking usage just in 1 year increased 25% for top performing banks. And what's really growing fast is the mobile adoption, 36% in 1 year. And what's further important is that it's a different kind of usage. It's no longer people just logging in to check their account balance. They're actually now buying services in these new channels that they weren't before. So it's also a difference in how these channels are being used. So it's definitely underway now. Now, moving on to the digital attackers. Now, when we look at other industries, this is an example I'm sure everyone can associate with. What has been the trend in disruption? We talked a little bit, I heard the word disruption. I think that was something that you discussed in Icelandic. I couldn't quite tell what it was, but what often happens is that the incumbents, they first see disruption happening slowly, and then all of a sudden it happens very quickly, like the blockbuster Netflix example here. Now, interestingly, if you look at similar curves today and you compared Amazon to Walmart, basically online versus big block retailer, you can actually see a similar trend. Where is it going to end? We don't know. Is Walmart going to get outcompeted? Hard to tell, right? But the question for us here is, what does this mean for financial services? Are we on a similar path or not? Well, if you try to ask that question, we see at least two dimensions that are important to try to determine whether an industry is ripe for disruption or not. And it's basically the potential that digital offers in taking costs out, and it's the adoption of digital by consumers. And if you plot these two, you see in that upper group here, on radical reshape, you find both insurance and retail banking, which is what many of you are in here today, right? And I think what's further more interesting is that if you look across the world and you look at different markets, the Nordics are probably higher in online sales than what this shows. So here, we're actually probably further out to the right, which just makes this even more ripe for disruption. And so we see it in another way also, right? We see what we call financial technology companies. They're just popping up like mushroom everywhere. The last count that we did, and that's probably a little bit dated by now, it was 12,000 startups that we could find in financial technology services, right? And these are companies that are coming in and are taking revenues from incumbent players. So you may ask, so where is this disruption happening and what is it impacting? Well, if we look at this again as a banking example, the typical split of revenue in a bank between retail, mid-corp, large-corp, and accounts, lending, payments, markets, right? Traditionally, a lot of this innovation, and the height of these bars show where the fintech companies are, is in the payments arena. But what we're seeing now is that they're moving into lending, and they're moving into anything retail. And this is when they're now starting to hit areas where revenues are bigger from an incumbent's perspective. And there's one thing that you can be sure of when there's disruptors coming into the market. Now, if you look at airlines, right? costs are going down. And that is putting pressure on, right? You can see the Ryanair, the EasyJet example. And again, if we look back to banking, we look at traditional bank versus pure online bank versus what you see in China with Tencent and Alibaba. Customer acquisition cost is a fraction of what we see in these banks, right? So what I want to leave you with on this one is that it means that incumbents need to act now. So if we conclude that action is required, what is now the value at stake? Well, I talked a little bit about it before, but digitization is not just about creating the next new app or being online. It's about much more than that. We see it in 4 areas. We see connectivity. It's how do I connect with my customers? How do I connect with my suppliers? How do I connect with my employees? It's in automation. How do I take previously heavily manual processes that are taking time and that cost money and make them into paperless, straight-through processing, end-to-end digitized processes? It's about decision-making. How do I use the data that I have, also data that exists out there that is not my data but that I can access, into making better decisions? And it's about being innovative and bringing up new products, new things into this event. Now, the example that we saw in the beginning, that little video I showed you, is actually hitting on 3 of these areas. It's hitting on connectivity, it's hitting on automation of process, and it's hitting on decision making. Because how else could you make a decision on a mortgage within 30 minutes if it wasn't a digital decision? So where does the value come from, right? So there's both upside and downside. We see a potential for increased revenue from new innovative products and innovative business models, maybe 5%. We see a bigger opportunity for driving more revenue out of existing products, better cross-selling, better sales, better ways of dealing with our customers. And we see an even bigger opportunity upside on the order of 30% on taking cost out of processes. And that to me is interesting, because where do we tend to focus our innovation? We tend to focus our innovation on saying new products, new ways of interacting with customers, but where does the cost come out? Processes, right? Now there's also, of course, risks in this, right? And that, you may say, is the reason that we go after innovation, because clearly if others in the market are innovating and coming up with new products, there's a big risk for us. And we see the margin compression that I spoke about before, because of better transparency, margins are going down. And we see some increased operational risk as well. So value is big, and it needs to go after it. Now, it's not easy to go after this. This requires a major transformation. There's, on the operations side, digitizing processes, going from manual to digital. On the channels, going from a person-driven process to a mobile-centric process. On data, going from having lots of data that you're not using to using your own data and pulling in data from the outside. On IT architecture, going from large, complex legacy systems to something that is much more nimble in a sort of a 2-speed architecture, where some things are allowed to exist at the slower pace and some things go faster. It's importantly on organization and ways of working, and this is, I want to emphasize, this is not just in IT, this is also within the business, of thinking about your business very differently. And it is about innovative culture and talent, having that right talent in place. So in summary, you can say it's about capturing the value, and it's about enabling the value capture, right? So clicking on these, right? Take the process example. Now we've scanned processes in banks and insurance companies, and we found there's about, you can say that the bank or insurance company has roughly about 600 processes. But what we also find is that the top 20 to 30 of these processes actually represent 40 to 50% of the cost and 80 to 90% of the customer interaction. So you can get very big benefits out of focusing on a handful of processes that drive most of your costs and drive most of your customer interactions. In fact, account opening, this is true both in insurance and in banking, driving down processing cost 60 to 70%, reducing time to open a new account from days to minutes, and by doing that, reducing customer or increasing customer conversion, basically, going from doubling customer conversion. It's a very valuable thing to go after. Channels, insurance example. Knip is a German startup. And so what they have done is that they've created a very simple app, which of course has a backend to it also, that takes over your insurance relationship with multiple insurance companies just in minutes. It's a very simple sign-up process. You basically put in where you think you have insurance today. You don't even need to know that you have it with all of these companies, right? But they will use this to go and pull the data and then go and ask all the other companies, do you have this customer also? Because of that, they don't need a lot of information from you. They need name, they need your birth date, where you live. Basically, that is what it is. And then they need a couple of companies to go ask. And they can get you to sign up. You sign, you put your signature on your mobile phone right away. So basically, in a couple of minutes, you've signed up to hand over your relationship with insurance companies on a mobile app. That clearly transforms the way that we need to think about it as insurance companies. Data. Cabbage is a small business, medium business lending provider. What they do that's different from many other providers is that they actually pull the online profile of your business. So they will go and look at what's happening on your eBay site, where you're probably selling your products, what's happening with your PayPal, where you're getting your payments, what's happening with your Andersson, where you're also selling things. So they pull all this data. Based on this data, they can do an automated approval process. They get an instant decision right away. You can get funds in days versus being multiple days to weeks. You can get lower fees, lower costs. Clearly a challenger of banks that are traditionally doing these small business loans, right? And that they're doing it by using data that's public to anyone. Anyone can pull this data off. Now I mentioned IT, two-speed architecture. Actually, it's a term. I mean, what this is really all about, the biggest pitfall that we perhaps see is companies saying, okay, I can't do anything until I have transformed my big legacy architecture that's going to take me 3 years or 5 years. And then it usually takes twice as long because you didn't realize all the problems, right? The key here is putting a good integration layer in, separating the front end from the back end, so that you can run the front-end updates and change these things much faster at a pace that follows what your customers are expecting. And then you can also give yourself peace to work with the back-end over the time that it should take, because no back-end transformation has ever happened in a short period of time. You need to allow this to take time. So this is very important. Ways of working organizationally, right? Traditional IT projects tend to start with business come up with requirements 18 months in advance. You try to define what's going to be done, then you hand it over to IT, perhaps you go through a budget process. IT iterates on this thing, and then a year and a half later something comes out and you realize that, oh crap, that's not exactly what I wanted. What we need to have in this new world is a much tighter collaboration between the business side and the IT side, and they need to work in much shorter cycles on developing these new things that we're putting out there, so that we can be more nimble, be more agile, all of these things. And I think it's a misnomer to think that this is something that's only a change on the IT side. It has to happen on the business side as well. We need to engage with our technology partners in a much better way. Final point, talent. We need a new culture here. CaixaBank is my Spanish is terrible, I apologize. I think it's very interesting what they've done now for the last 5 years or 4 years, since 2011. They hosted this FinApps party in Barcelona. They invite a bunch of students, they invite anyone basically to come and say, okay, create the next new app that is going to help us in financial services. They make it into fun competition. It's running something overnight. It's all the kinds of good things that's happening. Now that's a form of crowdsourcing. Basically getting other people in that are interested in doing this kind of stuff, get them to help you. And this is something that we really need to think about. How do we tap into other communities? Partnering with universities, getting young talent into these things. So, I think we've established now that we need to act now. The value at stake is significant. It's a big change. That's a pretty tall order, right? That's a lot of things that I'm asking you to do. Now, the good thing about this is that there is a transformation pattern that's actually fairly predictable. This has happened many times over before. I'm going to take the example of the music industry, an industry that you all know has gone to digital since quite some time. So what happened first was that Napster came around in 1999, and they started sharing music back and forth. In 2 years, by 2001, they had 80 million users. Then they ran into all sorts of legal challenges, and then perhaps some of you know the story, they had to shut down, basically. But what they proved was there was an interest from users to do this, to have digital music instead of having CDs or cassettes or LPs. Then came Apple around, right? Apple came with iTunes. They launched iTunes in 2003. What they managed to solve was a business issue. They solved the issue of how do I sell music, I let people download it, and I can get my music producers to be happy on the other end, right? So they proved that, okay, this is a model that's working. Until today, they've sold about 25 billion songs. And you know they charge about $1 per song, right? So it's, there's a lot of money in this. But now what's happening is that streaming came around, Spotify. Recently, Apple is launching their own streaming service. Now, what's tough about that? Well, the tough thing about that, Apple doing that is that they're killing their own revenue from iTunes, right? So they're taking a very tough decision to sort of say, okay, look, I realize the business is moving on. Buying song by song is no longer what people want to do. I need to make that tough business decision and say, okay, look, I'm going to do a different thing. So what do we take away from this? It's actually not about the innovator. It's about the model that the innovator is putting out there. So you don't have to be the first ones to the market with something. It's about being smart about what's going on in the market and then borrowing and stealing and sort of taking these models, right, or partnering to use them for yourself. Because the innovator, Napster example, not even there anymore, right? It's about paying attention to customer behavior. An important lesson here is that it's not necessarily only your own customers. It's what's happening with other people's customers that are potentially coming into this. You have to look more broadly than what you're on. And it's about being aware of what how the economics of the business is changing, and when a tough change comes around. I talked about Apple before, but take Amazon. Amazon was selling CDs. They're no longer selling CDs, right? Same thing there. They had to really change their model, and they had to give up on an old revenue stream to get a new revenue stream. That's a tough business decision to make that, right? So there's a digital playbook that I think you probably recognize, right? It's basically act quickly, build new businesses, think like an attacker, focus on the customer, innovate, experiment, and hire new talent. I argue that this playbook is actually flawed when it comes to financial services. If you act too quickly, you risk running in the wrong direction, and you're not going to have the right impact. If you build new businesses, it doesn't do anything to your core business. Thinking like an attacker is very hard when you're not an attacker. Focusing on the customer, well, it's exactly the problem I described before. If you focus on your customers, but there are other customers that are actually leading the pack, then you may not be learning what you want to learn. Innovation, perhaps not exactly what banks and insurance companies are known for. Experimentation, yeah, that's perhaps something that many people want to jump into, but it doesn't move the needle in many cases. And hiring new talent, well, I think many of you here will say, well, we have too many people already, right? So hiring more people is perhaps not the right answer. So I suggest something slightly different. Instead of acting quickly, I think you should act thoughtfully. That being said, you need to think now, right? So what this means is it's actually worthwhile taking the time to reflect and say, okay, what is it that we want to become and how should I get there? Instead of just focusing on building new business, have to have a plan to how do I transform my existing business. What you can think like is a winning incumbent. You are incumbents, many of you in this room here. You have an existing business, right? And then you need to think as one of those that are going to win, rather than thinking like an attacker. Focus on customer. This one is tricky, right? I mean, I would say then focus on being flexible because you don't know exactly what's going to happen. So we need to build in flexibility in the system. Innovate, I told you before, copy, steal. There's nothing wrong with that. Look around and see what's out there and say, okay, look, this seems like something important. Or for that matter, partner. That's another perfectly viable model. And I think an interesting model in the context of Iceland being a relatively small market in international setting, so it could be attractive for financial innovators to have a local partner to come in here. Invest at scale. You need to place a couple of bets. You may not be right on those bets, but it's better to do 2-3 things and try to drive them to completion than starting 15 things at once and not getting any of them to completion and not moving the needle. And hiring new talent, well, here I think there's a bit of a mix, right? There's a little bit of we need to build new talent within, build new capabilities within the existing talent, but there's also probably some injection of slightly different people. So I will leave you with a question that you can bring back to your organization. Are you using your existing assets while you still can? You have assets. You have customers. Are you engaging them in the right way? You have data. Are you mining that data in the right way? You have a balance sheet, which is unlike many of these financial tech startups. Can you reshape that in some way? You have a cash flow, also different from many startups. Can you invest some of that cash flow? You have a brand. Is it a digital brand? Can you digitize that brand? You have talent. Make sure that you put the talent to good use where it needs to be. I'll stop there and say thank you very much.